Hello, everyone. I hope you had a great weekend. Today, I'm going to talk about tech sector, the chart patterns, and also gap, which become very common these days. So, let's go to the chart and talk about it more. So, here, if you can see the chart of the triple Q, I would like to talk about the gaps first because they become more common. I've written a script that shows the gap with more than 1%, either bullish gaps or bearish gap, or upward gap or downward gap. So first look and see how common these gaps are in the past few weeks. So if you are looking at the gaps, you see since April, the beginning of April, we had so many gaps. These are actually 24 gaps, 13 was bullish gap, and 11 of them were bearish gap. There is one thing very important about these gaps. I write another script to see how many gaps get filled after the market opening and how many didn't get filled. And the result could be surprising for all of us. So if you are looking at this, we have so many gaps that did not get filled in the past few weeks. So this is also very interesting because if you are reading technical books, in most trading books, it has written 80% of the gaps will get filled in the same trading day, which in our case, in the past 3 months, is not true. But let's go and see what are the statistics. It will be very interesting for you if you look at it. So if you are looking at the result of these gaps, we had 24 gaps, 13 was bullish, 11 was bearish. The number is very close, although the bullish ones were most common. Then you see 16 out of the 24 did not get filled at the same day or after that. So it is interesting because we expect 80% of the gap to get filled after that. But here, 2/3 or 66%, 0.6 didn't get filled. On the other hand, if you are looking at the breakdown of the not filled, of those gaps that didn't get filled, you see 6 bullish gap didn't get filled, which in comparison to the 13 is less than half. It means 7 out of these 13 gaps get filled at the same day. So, and on the other hand, if you are looking at the gaps that didn't get filled, you see 10 was bearish gaps. So 10 out of 11 bearish gaps didn't get filled at the same day or after that. What this shows us is, first of all, we cannot have a good prediction about the gap. 1 in 3 trading days, we are going to have a gap, either gap up or gap down. So if you are looking, for example, from here to here, the area between here and here, if you are looking in between these 53 candles, we had 24 gaps, which is almost 40% of the days. So it's 1 in 3 or 4 in 10. We are going then from a statistical point of view, the chance of having a bearish gap or a bullish gap is the same. On the other hand, 2/3 of these gaps will not get filled. However, when you are looking at the bearish gap, 10 out of 11 or almost 91% of them didn't get filled. So if the market opened with bearish gap, more than 1%, it tends to go down and that gap will not get filled. So if you are an option trader, you need to trade in the direction of the gap without waiting for that gap to get filled. On the other hand, if the market is opening with a bullish gap, there is more than 50% chance that this gap is going to get filled. So this is very important that if you are looking at a bearish gap or a bullish gap, because they behave very, very differently. We don't expect the bearish gap to get filled with very high confidence. On the other hand, with we have like 50% chance of getting filled. So do not try to buy with the bullish gap. We all know we are in a bearish market, so it is not a good idea to trade in the direction of a bullish gap because there is a 50-50 chance. However, if you have a bearish gap, there is a very high chance that you go lower during the day without getting that gap filled. So this was like a very important thing that I would like to talk, especially for the option traders. On the other hand, if you see this phenomena, it is happening in Apple. Most of the gap you see didn't get filled. It happens in Tesla. It happens in AMD, Microsoft, and NVIDIA. So if you are looking, most of the gap do not get filled, especially those which are bearish gap. On the other hand, you see the number of the gap, bullish and bearish gap are the same. So this is a very important point. Another point that I would like to talk about is the Wyckoff analysis. Wyckoff was a very famous technical analyst. His charting style is his own style. We cannot compare it to anyone else because the way he approached the chart is very interesting and works the best for the current condition of the market. So if you are looking at Wyckoff analysis, you see that after this bullish run, the markup period, we had the distribution phase, then we had markdown followed by redistribution phase. This is now what we are now looking at, the chart. This is like the chart of NVIDIA. So this part of the chart could either be accumulation or redistribution. The redistribution and the accumulation pattern are pretty much the same. The only thing that makes the difference is that in the accumulation phase, we expect something with longer duration. On the other hand, the redistribution usually ends much sooner. Since we are in a markdown phase, these patterns could be either redistribution phase and possibly going lower, or it could be reaccumulation or accumulation phase. We should follow this and look at the price action to this actually upper zone, which I mark with red dotted line. So this is very important. If we are looking at this chart and we want to compare it this, we could be in secondary test in phase B. So let's look at other charts and see how it is behaving in other charts. So if you are looking at this chart, if we are in accumulation phase of Wyckoff theory, we are in the secondary test phase B. This is the triple Q. This could be the primary sell-off. This is like the selling climax, automatic rally, which is caused by short covering. and then we are down to the secondary phase. So if you are looking at this, this is pretty much the same to what we have in Apple, what we have in Tesla, what we have in AMD, and what we have in Microsoft. So the price pattern becomes pretty much the same in most important ticker. One thing that you should have keep in mind, if you are looking at this pattern, you also see the very same pattern in the ARK Invest, which is one of we can use the RK as an index for many of the assets with very high risk, and small caps and tech stocks without profit. So if you are looking at this pattern also presented in the ARK. What is coming next could be a very messy market like this. So in some books, in some technical analysis books, they call it like time correction, when the price doesn't go anywhere. But there is something interesting. If you are looking at the percentage of the zone that we are dealing with, it's like a 20% range. So we can trade in this area, especially for the option trader, even the stock trader who are swing traders. When you are in a bearish market with long-term view that is going down more, you can sell around here. Or if you are a risk taker and you want to trade the both side, you can buy below the support line as soon as you see a sign of reversal in lower time frame, and then sell your long position around here and also short it. So generally speaking, this type of trade could be very risky. You don't expect it to be very easy because it is considered some sort of consolidation. The good thing about the about Wyckoff is that the Wyckoff actually separate the market into two zones: mark up and mark down. In between, you are going to have accumulation distribution phases, which are going like horizontal pattern, or what we call it the consolidation pattern. I prefer not to trade in the consolidation pattern. Why I do not prefer to trade in the consolidation pattern, and he actually asks you not to trade around here because it is very very messy. If you are looking, like the best example could be this chart. If you are looking 1 day green, 1 day red, 1 day green, 1 day red, 1 day green, 1 day red, then you are going down, going up, then 1 day green, 1 day red, 1 day green, 2 red. This is like, you see, there is no trend. Then you see a sharp drop. What modification should we add to this is that in some assets, because the volatility in the market is high and the range of this fluctuation is something around 20-25%, if we can take good position entry around here or around here with proper risk management, we can book some good profit. So this is the thing that I think I need to talk about with you guys. I record this video. Please, if you have any question regarding this type of analysis, send it to the chat groups or make your comment. I will try to answer your comments below the post. I will try to post this recording on YouTube so you can have it on the YouTube as well. So this was the analysis of the tech stocks behavior that I like to talk to you. Be careful of the gaps. 2/3 of them will not get filled. Most of them that are not get filled is bearish gap. 10 out of 11 in the past 14 gaps, they didn't get filled. This is very critical for option trading. And also, if you are looking at the bullish gap, there is a 50-50 chance to get filled or not get filled. So as I always said, try to trade in accordance with the trend. You will have the higher chance or higher probability of success if you are calculating your risk very well. Thank you so much for listening to me. I'm going to publish the recording as soon as it is possible.